Okay, welcome everybody. Today we're going to do the same. It's the same day. It's just now dark outside because I've had to watch back through an hour of the previous backtesting video. So now I've got two lights on my face and I look like the chosen one. Without further ado, we're going to get into it. It's US30. We're going to be backtesting US30. By this point now, by the video, you should know or have a basic understanding of how we trade US30. But so today I'm just going to be going through an hour or so, give or take, of backtesting. So without further ado, all we're going to do is scrunch it up real tight, hit the replay mode. We're going to go back. Should we go back to the 1st of July? Or would it be the 3rd where we start? The 1st of July. Let's go back to there, shall we? Hopefully it's not too bright. It looks okay when I zoom in big screen. So hopefully I'm not blinding you guys. It's the last thing I'd want to do. But with this strategy, I mean, you guys know how it works. US30 is the easiest one because you barely need to find other zones. All you have to do is trade the previous US session, high and low. And I'll mark it out again, just for people who are not quite sure. And whenever I post my analysis, whether it's a video on the website or because Discord is weird about posting videos, it just is photos on the Discord. So you'll see a photo of my chart and it'll look something like this. Basically all we're looking for, if we're going to take it to the buy side, US session opens, breaks above, gives us a tap, 5-minute engulfing, pushes up all the way to the top. If we open in this zone, get a 5-minute bearish reaction off the top of the zone, we're going to be trading it to the bottom of the zone. Same thing goes if we open or push near to the bottom, we get a 5-minute bullish engulfing. Once we tap into the zone, then we're going to simply trade it back to the top. And then you can probably guess if we break through, get a tap in, we're looking for a 5-minute bearish candle, and we'd take it further down. Whenever we break above or below, we would then use a previous US session from a week ago, 3 years ago, whatever, 10, 12 years ago, as seen in the last backtesting session, to target for profits. And that's it. So it's quite a simple concept. We will go through it, like I say. I just deleted it all. Okay. I'm going to go mark the zones up and I'll be back. I do not know what's happening today, but without further ado, we're going to jump to the 5-minute. We're going to play price on instead of deleting everything. And we're going to see what price gives us. So we didn't get a tap in. We're waiting for a tap in. We didn't get a 5-minute close here. We just exploded right through it. So now all it flips to is that we are waiting for that break. Well, we had the break. We're just waiting for that retest to take price up. Once we get the tap in, if we do, then we'd start looking for other targets. Because there's no point of looking for targets unless we actually get a tap in. Will we get a tap in? It's not looking likely. So unfortunately for this day, price has just exploded without us. And it happens. And with US30, you'll understand that it happens quite a lot. But you could say that about any pair. So without further ado, we're going to carry on to the next example. Now the thing is, with US30, you don't even have to delete your little rectangles. You just have to move them, because you'll only ever have 2 rectangles on your screen, unless obviously you have to find targets if you do get a break above. So let us again play price on and not delete anything, please. It's just a case of waiting. We're below. US session will open soon. There we go. So, unfortunately, I'm a bit slow on the clicker today, but you can see price broke down, US session open, tapped in, we got our engulfing candle here. Where would our stops be? Below the structure point, or you could do above the zone and above this wick here. So we're above the wicks here, we're above the structure point here, or you could play a safer bet, go above the zone, go above these wicks as well, because to account for them lovely, lovely spreads. Where would your target be? Jump back to the 30-minute. Now, because we created such a huge zone here, you don't have to target all the way down here. You can be smart about it in terms of, once we're in this, because it's such a huge zone, you can go back and you can find another zone in this sort of area to target. For the sake of the back testing, just so I can get as many examples in as possible, I'm just going to leave this one here. We could go back, like I say, go find some targets for us to target maybe in the middle of the zone. So take this trade with a pinch of salt unless it obviously reverses. However, we have done basically all we can do here. So we're going to play price on, drops, 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 reverses, reverses, and I would like to say, so playing price on here, I'd like to say you would either move to break even. Once we had this sort of structure here, you would have moved to break even here, so you would have been taken out, or you could have let the trade run, and let's just look where 5 o'clock would have got you. If we look to here, so it could have been the fact that this reversal point was a previous US high or low in the past. Obviously we didn't go back for the sake of the back testing, but yeah, where was our 5 o'clock candle? Was it this one? Yeah, it was. So you would have been out for a 1 to, let's call it 0.8%. So it's not bad, and it's better than a break even, and it's better than a loser. However, when we had that structure break down to the downside, you could have then moved it to break even, because the sheer amount of the level of push we had and the fact that it formed a bit of structure in the break even zone. So you could argue that if we ever broke above that, then the trade would be invalid anyway. So you could have just moved it to break even and said, well, if price pushes past this point, passes past my break even point, it's probably invalid anyway, so it makes sense to then move to break even. So hopefully that makes sense. If not, and if you wanted to hold it, you would have come out positive, but then could be argued that break even is a positive anyway. So let us play price on here, and our zones are, okay, it makes it easy for me because I don't have to make new rectangles each time. So we draw it like that, play price on, we go to the 5 minutes, I'm not missing anything. And again, just to recap, if we get a break, we're waiting for a retest to take it higher. If we come here, we're waiting for a 5-minute bearish engulfing to take it lower, as in the previous example. And if price comes down all the way here, we're waiting for a bullish engulfing to take us back to the top of the zone, ideally. Or if we get a break below here, I mean, you can guess that we're going to take it lower. So that is the general plan. There's a general consensus. So, without further ado, as I keep saying, we shall carry on. So, we see we broke through the zone and we had a tap back in. Now, if the next candle close was engulfing this one, you can guess we would be in longs. However, it didn't. We broke above and then we pushed straight back in. So, if this one decides to tap in and we start to get some bearish engulfing candles, then I can still see it go short. But it's a lot of just playing the patience game. So, again, we see we blew right through it. The bias then flips. We're waiting for a tap back in here to take it to the upside. And again, this is one of those scenarios where price just explodes. So, like I say, it happens a lot with US30 where price will just explode in any sort of direction. In this case, obviously it was very, very bullish. But we didn't get our sets up. So we're not going to take a trade, and we are simply going to move on to the next one. And that's the only way you can think about it. You can't get butthurt that you've just missed out on a trade, because then success will never come your way if you don't master patience. at least when it comes to the market. At least you can't be rushing around in the market, and you can't be complaining about missed opportunities. So again, moving on to the next day, the same rules apply. The highs, the lows, we all know what we're looking for now. So if I play price on here, just skip it on a little bit, click, 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 wait for a tap in. Wow, that's some low volume, and now we're past 5 o'clock. So unfortunately, I mean, look at that. You wouldn't want to be in a trade anyway, because looking at that price action, it would be like sitting through a very painful experience. So again, the same rules apply. It doesn't matter how large or small the two zones create themselves. Like say this one's huge, but we'd still have it up here and up here. This one's tiny, but we'd still follow the plan, follow the rules, and mark out the highs and lows of the session, and trade the next session off these zones. Obviously, when it's smaller like this, and even when it's bigger like this, the chances of price coming back in and tapping in is obviously reduced. The same if, for example, our previous trade that we took in this session, our zone was huge. So we tried to target the bottom of the zone, but the reality, because it was so big, the likelihood of that ever hitting was really quite slim. So that's why I recommended going back, finding a different zone that you could target in the middle, and that might have been why price reversed at that point. So yeah, so when there's a small zone like this and price has already opened up here, yes, it's Asia session and we still need London session, just be mindful that you're not always going to get a tap back into the zone before a push up or whatever. So it might be you marked out your zones, but price will never even come near it. Again, that's just a case of moving on to the next day. So it's a simple process. It's just you really have to have the patience for it, and that's it, you know, can take a while to master, especially if you've gone 3-4 days and your zones haven't been hit. That's when people start getting complacent, start rushing trades, and start making the mistakes that continue to hold them back. So have the patience, have the plan. You've got the plan, you've got the strategy, just have the patience. Right on. So if we play price on here, we'll see if we can get a tap back in, see what London session produces us, because Asia just likes to consolidate. And again, any news, it's hard to trade that off, because I'm not, in my backtesting session, I'm not going to then go, every day I backtest, I'm not going to go on Forex Factory, for example, search the date up and see what news there was. You can, but it's going to take a significantly more time out of your day, and some people only have a limited amount of times in their day. So if you want to do it properly, then I would say do that, but just understand the fact that it's going to take a lot longer to do that than if you were just to play price on. But you'll get more accurate results doing it that way. Or you could just forward test. But it's up to you as a trader to decide what you'd like to do. So we're in this zone here, we've broken through, and we're going to, in this situation, because we've broken into the zone, we're going to wait for a bearish engulfing. When we come to this, you can probably assume what I'm going to say. Let's say we get a bearish engulfing candle here and our stops are here. Would it make sense to trade to the bottom of the zone? No. So if it does end up that we do get a bearish engulfing candle to here, I wouldn't take the trade anyway. So that you're going to get some days where price comes into your zone and looks good, but then you get up the risk to reward and you're like, well, hang on a minute, I'm only going to make 0.5% to lose 1 or 2%. It doesn't really make sense, does it? So that's when, again, it comes down to you to decide, am I going to take it or not? Like I said, I've given my opinion. I wouldn't take it if we did get that bearish engulfing, which we did. But let's, for the sake of the video, sake of the argument, it's above the zone, above the wicks, above the structure point, but your take profit would be, look at that, 0.3%. So you're risking 1 or 2%, depending on where you are in your account, to make either 0.6% or 0.3%, again, depending on how much you're risking. So again, you got to see that and you got to deem it not worth it. And then you can sort of carry it on. Now, what time were we on? 2:50. So if, again, because we're still in the session zone and it's not after 4 and we're not approaching 4, if we still get a break below this, we can still take it lower. So by no means is the day now invalidated. You can now wait further for the day to carry on, break below, get a retest, and then potentially take it lower to a previous US session zone. So it's, you know, just the fact that this has now invalidated because of how tight the zone was, because the Friday was just full of consolidation, doesn't now mean it's invalidated. It would only be invalidated, of course, if it was 4 o'clock, or we just never got that break below. So we will see what price does. It carries on. Do we get a tap back in? No. So we've had sort of the reverse effect where we've just absolutely slumped. Absolutely slumped for the day, instead of just going straight up. Again, like I say, US30, it's going to happen a lot, but as long as we stick to the plan, this is what's going to make us the 10% instead of holding on to that 90% of failing traders. We're aiming to be in that 10%. We want to be in that 10%. So do what the 10% do. Be patient. Understand if your strategy and targets and plan is not met, then you're not going to be in that trade. It's when you start pushing the limits, I'll just get in there, and it might work for you once. You keep doing that, and you understand why people have plans and follow plans and strategies. And then you yourself end up jumping strategies anyway. So it's all a cycle, and until you learn sort of how to jump out of that cycle and form your own sort of strategy and make it work for you, then you're going to be in the same boat for a long time. Hence why it takes people so long. Anywho, we move on. We've got quite a nice big range for tomorrow if we do open up inside of it. Let's jump to the 5 minutes. And wow, it's going to be a day like the Friday and we're on a Tuesday. So again, a day full of consolidation. Not a lot you can do about that, of course. Let's play price on a little bit. And then we're going to edit our zones. So again, just a case of adjusting the beautiful rectangles that we all know and love. And then if we play price on a little bit, jump to the 5 minute here. Lovely, lovely. So we've reached the top of the zone. If we get that engulfing, then we shall be in. So there we go. So we tapped in, we got our engulfing. We can already see price reversing, but you've got to see it as it's not back testing. In every situation, we've tapped in and we've created our engulfing candle. So I would always be in this trade. Whether your stops were above these wicks, which would be quite a tight stop, or whether it was above the zone, that is up to you, and that is up to you to realize, is the risk to reward something that I want to get into, or should I have a tighter stop, increase that risk, but increase my profits if it does go right. However, you're jeopardizing how quickly it goes to your stop loss. So we'll see. We'll go above the zone, we'll follow the plan, and we'll keep the take profit down here. However, obviously judging by these two candles here, you can probably see where the trade is going. But in a real life scenario, you would have seen this and be like, oh great. You wouldn't have seen these yet, because these are 5 minutes apart. You're not going to wait another 15 minutes to see what price does, do you? Because half the time you'd miss out on so many opportunities. So what you have to do is go with what you see, and you have to treat backtesting like that as well. You can't lie to yourself. If you guys saw the previous video I made, which I was just solely trading US session, and in the first part of the video I showed you the spreadsheets that I was using a couple of years ago. That was when I was lying to myself about the backtesting, because you see all the 3% I made on there and the lack of losses that I had, yet I wasn't profitable, but on the sheet I was. But that's because I was lying to myself in backtesting. And so as soon as you start to do that, then it's like, well, what's the point of technically all them wasted hours? Because I was just lying to myself about the results. So you have to trade it, and you have to be honest with yourself. For example, would be in this trade, although it looks a bit sketch. So if we play price on here, we can see price just absolutely shoots through the roof. Now we have a one trade rule policy. If this was break even, then we could trade the retest 5 minute engulfing if it gave us one, and a push to the upside. We could do that. However, because this was a loss, we'd simply close the charts, do something else, move on to the next day. That's all you'd do. For the sake of the backtesting video, I am just going to see if it gives us a engulfing candle, and it doesn't even give us that, and then it melts to the bottom. So you can see how this can be frustrating. So as soon as you take a loss, journal it, note it down. Anything you could have done differently? No. If you were doing this, then no. There's genuinely not. You put it above the zone, you gave your stop enough. You didn't have a too tight stop loss, your stop was perfect. Your target was perfect, your entry was perfect. Is there anything else you could do? Personally, I wouldn't write anything down. I would write no, followed plan. Unfortunately, trade just didn't go my way. And you move on to the next one. You could write price broke down, tapped, and then would have hit TP. But what information would that be? There would never be a scenario where your stops would be up here. So you could write that excess information, but when you go back and read it, in 2 weeks' time, when you've completely forgotten about the losing trade that you took, you'll read it and be like, well, what use is that to me? So don't waste your time writing pointless information down. I've been there before. Because like I say, I like to use my little notepad, which I've just spilled coffee all over, by the way, which is fantastic. But I've ruined my notebook. But I like to use my notebook, write down my trades. And yeah, it was a lot of scenarios, especially 2-3 years ago, where I just write excess information. For example, I would describe what happened here. Price completely pushed up, and then it hit my TP, so I was nearly right. Sort of like reassuring myself that I wasn't all wrong, which is ridiculous. Just say, did everything right. Unfortunately, price came up, and you could then say, but did eventually come down and hit TP. But again, when you read that, you'd look back at it and be like, well, did price hit the TP or did we lose the trade? So again, up to you. But ideally, I'd recommend not writing them excess pieces of information, just because they're completely unnecessary. You don't need them. You do not need them. Anywho, let us play price on. So we're going to have a nice big zone for tomorrow in terms of this huge wick on the 30 minute. And then if we just move this bad boy forward and put it there. Lovely. And then we're just going to wait to see what price does, follow it along. Which is the fun part, isn't it? Waiting, waiting, waiting. But that is the name of the game, unfortunately. Do we get a tap in? We tapped in. Didn't get an engulfing. Bingo. So we broke above. We didn't get our 5 minute bearish reaction off this zone, so we broke above. Therefore, I am willing to take longs. Again, we come to that point. Do you have it below the zone? Do you have it below the structure? Because the structure is so tight in this scenario, I would have it below the zone. Just make sure the take profit is worth it, as I keep saying. So if it comes out to be like take profit doesn't really seem worth it, then obviously, as you saw before, we just wouldn't take the trade. In this scenario, just going off the most previous zone, a 1-2, let's call it a 1-2, for ease's sake, this is very much worth it. Again, you could have it down here for a 1-to-1, but that again comes down to you and your risk to reward. Personally, I'm just going to put it below the zone. So, play price on. Price goes up and up and up and up. And we are past 5, I've just realised. So if we go to here, 5 o'clock, it would have been a 1-to-1 anyway. So again, journal it, write it down, don't go into too much detail. You did everything right. We made 1% and then closed at 5 p.m. Or, like I say, move to break even at 5 p.m. because in that scenario you could have. Let's just see actually if we play price on a little bit. No. So if you moved to break even and left it overnight, you would have been stopped out at break even anyway. Hence why we have the rule of taking all profits out at 5 p.m. because it all kind of trickles away. Sometimes obviously it's going to hit TP, but I found more often than not it hits stop loss or, well, break even. So I always just take out profits or take out losses. If I'm down 0.25% at 5 o'clock, that 0.25% is coming with me. I'm taking that loss. Because it's better than leaving it overnight and then waking up to minus 1%, minus 2%. So, again, up to you guys how you want to manage that. I've given you the stuff that I use, and I've given you other options to use. So it's completely up to you how you want to use them. But like I say, I'd recommend just taking all profits out at 5 p.m. or any losses out at 5 p.m. Just because then we're out of our trading hours. So it's like we don't ever trade this, so we don't really understand how it moves. So personally, yeah, I'd rather take my profits and take my losses rather than waking up to a bigger loss than I should have, or waking up to going to bed seeing profits in my account and then waking up and saying, oh, we've just hit break even anyway. But it's up to you how you want to manage that. So anyway, I'm going to carry on. We're going to stop the good old waffling. If we jump to our trusty 5 minute, I'm going to wait for a break above or below. We seem to be getting neither. So what did we get here? Right. So we got a break below. We got a tap back in, and we had our engulfing candle here. So again, if you're going to be true to yourself, you want to ideally put it above the wick in this scenario. And again, this comes down to if the risk to reward is worth it. It might be the fact that it might not be. But again, we'll go see some targets that we can, well, target. So, I mean, straight off the bat, we have this little number here, which we can target. But we cannot ignore the fact of this. I mean, look how many times we reject off this zone. We break above it, and then the same US session, we reject off it as well. And I believe if we sort of look deeper into it, that's where we've already rejected from. However, would you have known that knowing the candle? No, you wouldn't have. But in terms of targets, you would still have it as a target. So your stop would be looking like, as soon as this candle closed here that my cursor's on, you'd have your stop loss above here, and your target, because it was a previous US session low, would be here. So you got to ask yourself, would you even be in this trade? No. No, you shouldn't have been. If that US session zone wasn't there and all that support wasn't there, by all means, then you would be in it because it would be a 1 to 1.6. So yeah, of course you would have been in that if the zone wasn't there. So it could all be at that price now rejects this zone again and comes down. However, well, you just wouldn't be in the trade regardless because of that zone. So we got our entry criteria. We were true to ourselves in the backtesting. However, we saw the other zone. So always mark the risk to reward out before you enter the trade. Oh, is the risk worth it? If it's not, like a day like today, don't. And then you can always allow that, because you haven't taken a loss, you could always allow the opportunity for price to come back up through, good job, through here, tap back in, and then push all the way back up. So by calculating the risk to reward and understanding the fact that it wouldn't have been worth it to make, what was it, 0.6%, something like that, you then allow the opportunity for another trade if we were to break above this zone. So we're going to see what price does, and if we do break above, then it could be a potential opportunity. So we have our tap in now, Do we get an engulfing candle? We do, but it's not above the zone. And therefore price just kind of trickles out like so. So you can see, you know, how US30 is starting to, it does respect these zones, but you have to be very, very careful in terms of your entry points, your exit points, calculating risk and calculating if it's even worth getting in the trade in the first place. Because a lot of the time you might get baited out at this, maybe miss seeing this zone here that we just saw there with all, where the two US zones retracted from. You might have missed that. You might have targeted that and be like, you've just been stopped out. However, actually in that case you wouldn't have been, because let's just, where is it? Break below, retest, come down. You would have had it above the wick, of course, that's what we teach. And then your target would have been down here. However, I believe it's fat. It's not actually. 5 o'clock. You would have been in a little bit of a loss. But again, when you see a stop that big and you see a zone like this, never take it. Never take it. Because the risk, well, just quite clearly is not worth it. So, on to the next one. On to the next, but it's providing some good learning lessons. And these rules still apply to the other pairs, right? Don't think it's solely for this one. If the risk isn't worth it on GJ, EU, something like that, then just don't take the trade. And it's just about having them rules and having that understanding of your strategy and your plan that helps you get away from these sort of trades. So, yeah. Let's just carry on. Basically a day of consolidation, really, in the bigger picture scheme of things. But you get the gist to sort of what we're looking for here. Let's jump to the 5 minute, please. Okay, so came in, tapped in the zone. Did it give us our engulfing? No. We broke into the zone and we are waiting for a tap in. Again on this one, because the zone is so tight, you have to be careful and calculate if the risk to reward is worth it. So we're going to keep playing price on. Again, I mean, we came to the top of the zone and we got our engulfing, which is perfect. But again, the risk to reward, you can already, I don't even have to draw it out. You can see you'd be making like maybe 0.1% there. So just, it's unfortunate really that I don't have examples to give. Again, we had to tap in and we had our engulfing here. Where would your target be? Up here? Not worth it. So you're going to get a few days like this, and I feel like a lot of examples have ended up like this. But you can see, I mean, if you had any doubt, this is quite a good example of how the zones trade off each other and how price actually respects these levels. So it does work. You just have to be very patient, and this is why, yes, you can just trade this solely, but the amount of trading days that you'd miss out on just because price is doing something like this, whether you could be trading gold or silver instead, or even your London pairs, you know, you limit your chances very much. So a lot of people suggest just trading one pair. On the flip side of that, then I would say you're getting less experience. And as a starter, I'd say at least have 3 to 5 pairs to go at. Maybe 2 in London session, 3 in US session, something like that. Or if you trade Asia session, something like that. So have something like that just so you can use your plan and have that as much experience as possible. Because if I'm trading and I have the option to trade 5 pairs a day, I have at least, hopefully, let's say 2 a day that are going to give me setups, roughly. All right, that's a very ballpark number. But roughly I have 2. Whether if you're just trading 1, then the amount of opportunities I'm going to get instead of you is through the roof. And the amount of opportunities I've had to learn from my mistakes, especially as a starter, I would rather have more pairs, more opportunities to do that, than just trading 1 pair just to know how it moves. You understand how price moves, when you have a strategy. When you have a strategy, a lot of the time it applies to everything. Like I say, my London strategy works for all sorts of pairs. My US strategy works for all sorts of pairs. So it's not about mastering one pair. I would say don't go overboard. Get 3 to 5. Don't go any more than that. You don't need to be looking at all these charts. 3 to 5. Just so you can have a couple of setups, or maybe even one setup a day, just so you can make them mistakes, you know, so you can have them winners, so you can have them losers, so you can have them break-evens, so you can have them days of consolidation where the setup looks great. As soon as you're in the setup, then you have a moment of consolidation, and it just trickles out for the rest of the day. And go through that emotion that you're in a trade and it's just consolidating out. Have the experience. It's all about experience in the market, and if you're just trading one pair, especially as a starter, you're going to miss out on a lot of them experience, and I believe it will set you back. So have a couple. You don't have to have 3 to 5, just at least bare minimum 2. So if one's consolidating, with a bit of luck, the other one's moving a little differently, and hopefully you can get a setup. But hopefully that makes sense in terms of just getting the experience, you know. Anyway, back to the chart. So we can see how price reacts. And I'm going to jump back to the 30-minute here because, it's 4:30 there. 4:30, and we weren't in any positions. Therefore, we just move on to the next day. So all we do is crack on. Move your zones as you normally would. Lovely, lovely stuff. And then again, play price on. So you can see how it's the most simple of the strategies, simply because there's, barely anything to it. And it does play off using the US session strategy in terms of targets and the general concept as well. It's just this one you're using 2 different zones. So we got our engulfing pattern. I'm in this trade above the zone, above the wicks. Because this wick right here, let me draw an arrow just in case the video doesn't pick it up. This wick right here is very close to these set of wicks right here. Therefore, I am just going to pick these wicks. If this wick, if these wicks were like sky high, obviously I wouldn't target them. But because they're close, I would just have them above, just for that extra bit of security. Targets, we can have it all the way down here again. I think for this one it wouldn't be worth having a middle target. Just be wary. You saw the previous US session react multiple times off this zone. So if price does come down to this point, then at least have a break-even zone or target, or maybe move your stop a little bit downwards, obviously not up. We're not trying to lose more money, we're trying to save more money in that sense. But yeah, this is what I do. We've got the entry criteria, we tapped in, we pushed down, we've got our stops. Let's see what price does. Unfortunately, wicks us out and then comes to take profit. But if I zoom all the way into this little number here, we can see how big that wick is. So unfortunately, a case of getting stopped out by the wicks. Again, if you were to have it just that tad bit higher, you would have gotten away with it. Happens. Again, just literally just happens. So you can, when there's multiple wicks like this, the quote-unquote liquidity boys will be out, saying, haha, you got taken out by liquidity. Very funny. So you could wait when there's a bunch of wicks like this. You could wait for a further push up, for the liquidity to be taken out, for a further push to the downside. Personally, I don't do that. If I'm going to have my stops above the wicks, I'm going to have it above the wicks. Yes, it's going to be frustrating when I go back on the day and I'm looking, I'm like, oh great. But again, I've had the experiences because I've traded too long now, that these happen. These literally happen. You could account for liquidity and still get stopped out by a liquidity sweep. So up to you how you want to play it. I would say just stick to what we know, putting it above the wicks. Don't get too bummed out if you get wicked out. It's part of the job. It's part of the process. It is just what happens. So all you have to do, pack up your bags. Yes, it's annoying looking at this. Don't get me wrong. You just move on. And that's the whole point. And you have to be true to yourself. Look, it happened. Write down in your notepad. I followed criteria. Felt like stock was in a good position, because it was. You followed your plan. It was above the wicks and it was above the structure point. It was just a bit unfortunate that we didn't have it literally a tiny bit higher. Let me just see, a tiny bit higher. And look at that. So, in your notebook, I would write something like, followed criteria, unfortunately wicked out, but then price immediately shot down to take profit area. Unfortunately, one of those days, but moving on to the next one. And as soon as you can sort of repeat that sort of mindset to yourself, day in, day out, you'll see something like this, be like, oh, great. Because obviously we're all human. It's not like when you're an experienced trader, you then go, you know what I mean? You don't just look and then you're not a robot. These still annoy me. Don't get me wrong, and these will annoy anyway, because it's like, oh great. But it's how you take. People see that and be like, damn it! Why didn't I have it high? Why didn't I do this? Why didn't I do that? I followed my plan. Unfortunately, I got wicked out. Yes, it's annoying. I'm human. I have emotions, but we're just going to move on. There's nothing you can do. There's literally nothing you can do. Yes, we got wicked out. What is the best course of action? Is it to cry, complain about it, and say, oh, what you could have done or what you could have got away with? No. Or is it, okay, this is what happened. I've wrote it down, but I'm happy with sort of how the trade went anyway. Should I move on to the next day? Yes. And that's what you got to get. That's what you got to get in your head, boys and girls. That's what you got to have in your head. Just, okay, this happened. Let's move on. And that's it. But there's never going to be a case where you see something like that and you act like a robot. We are humans, boys. As much as people say, like, trade like a robot, have emotion. Just not too much emotion, you know? Anywho, I've said that so many times this video. Jeez. It's a long time. It's a long time talking to yourself, you know what I mean? You start to go a bit crazy. Anyway, we have our zones and we have our plan of what we are going to do. So, let us play price on. The thing is, I've got to go back and watch all this through. So, hour of recording, an hour of watching it back, just so none of my hiccups or whatever. Anyway, we're playing price on. Not that anyone cares about that. Don't know what I'm waffling about really. But we're playing price on here. Let's just press play. Give me poor mouse arrest. Do we come down? Flipping heck. Yes, we do. What's the time here? 3:30. We got our break below, and we got our tap back in, and then our engulfing. Again, take this with a pinch of salt because we can, but we're not going to. Check the news that was happening on a day like today. Big push down like that, might be something else. So yeah. Also, if you haven't checked the news on the day and you get, for example, completely wicked out, it's also worth checking the news at the end of the day. Just say, did I miss out on the news? If so, write it down. That is one that I was a complete bugger for. I would never, I would always miss out on checking the news. Always check the news. Because if you shouldn't be trading and you take a trade without knowing that there's red folder news coming out and you get completely wicked out before it coming, I'm not talking a little wick, like completely wicked out, before it coming to you take profit or something like that, then it's definitely worth checking the news and definitely worth writing it down just so it doesn't happen again. Because you could do everything right, you could have a right setup, but if you don't check the news and there's CPI coming out in a few minutes, and you don't check it and you get completely wicked out, technically that's not your fault. You followed your plan, however, you just didn't check the news. Always check the news. Because like I say, I was a sucker for it. We can see I've played price on a bit too far anyway, and sort of see where it's going. However, let's just treat it like we haven't. Oh, and the 30-minute gives it away anyway that this is going to be an absolute loser. But we would treat it like we normally would. Where would you find targets? Previous US sessions, highs and lows. It's a bit far low down to to find, but for the sake of the video, I'm just going to crack on with it. I mean, we've all seen it, seen price shoot right through, but again, stops above the structure point. We've got this high level of resistance here, so again, you could be like, well, I want it higher. Fair enough, and it might save you if you do, but the risk to reward then wouldn't be worth it. So, yeah, we'll see it going up and up and up. Play price on here, but we're past 5 o'clock now anyway. So, if we just continue to play price on and just stop that nonsense. And we put our top here, and this bottom zone is going to be nice. I hate it when there's huge wicks. It's quite annoying. Anywho, let us crack on. And then let's play price on here. Let's see. Okay. Broke above, didn't get that engulfing, and we've come right back down. Now, this is a simple case of there was most definitely some sort of news report out. So you're not going to be able to see this unless you're actually trading on the day and you've checked the news on the day. And this is the problem with backtesting, but give it a bit of chance. But yeah, we'll see if we ever get our tap back in, or do we just explode? Because whatever news was out must have been fantastic. No. Okay, we get a tap back in, and we get our engulfing candle. What time is it? 2:45. Always worth checking the time on backtesting as well, just so you don't get caught out. Right, below the zone, below the structure, and below the wicks. In terms of take profit, you have one right there. It's literally giving you one. So we can have that as our first one, but as you can see, it's already reacting off here. So if you saw it's reacted off here, and you see it's come down into our zone and given us a reaction, there's one of two things you can do. Get into a trade and lower your risk, because we've already reacted to a zone that could potentially reverse price. Two, you could not get in the trade because you could say, well, if I got in, the target I would have targeted had potentially already been hit, so I wouldn't get in. Or actually three, you could just trade it like it hasn't happened, and you can be a bit more ballsy. But personally, in this situation, if I saw, look, price has already hit this target here, obviously we've seen this now because it's replay mode, but am I going to get back into this trade? Personally, no. If we've already shot through the sky, because that was definitely news, I'm not being funny, if we've shot through the sky, and we've already hit this target, I would say I would rather just trade either gold or silver if there's an opportunity on that. I'm not going to waste my time and my money putting something into this. Again, it's understanding and having respect for your hard-earned money, that you're not just going to fling it all on a trade just because, well, you want to trade. Right? We've boosted up, we've hit this take profit target. You can get in at a lower risk, and I would, if you want to get in, please put your risk at least half, or at least 0.25%. If you do want to trade. However, we've already hit my first, what would have been my take profit. So therefore, personally, I wouldn't trade it, because I work hard for my money, and I wouldn't fling it all on a trade like this. So yeah. Again, different scenarios and different things you learn as well through the experience that you get through trading multiple players and having that experience of getting them losers. And then especially when you go review them losers and you see, the target was already hit, but it came back to my zone and it gave me an entry point, but the take profit target was already hit. Do you then use that as a learning curve, or do you just fling it, use it as a learning curve, and say, look, well, the trade didn't work out when it already hit the take profit, so I'm just going to back away from this trade. Or if the setup looks good, then I'm going to go in, but I'm going to go in at a lower risk. So you've realized the problem, you've understood it, journaled it, and you've adjusted to that, such as lowering your risk or just taking a step back and maybe looking at one of your other pairs that you're trading. So it's up to you how to manage it. Just be smart about it. It's your money. It's not my money, you know what I mean? It's your hard-earned money at the end of the day. When it comes to me trading that, like I say, I work hard for my money. I'm not going to go into that. Why would I waste money on that if I know in the past that once my TP's already been hit, the likelihood of it being hit again once price is retracted and giving me an entry signal is not great. I'm just not going to take the risk. And again, it's separating yourself from the 90% to the 10%. So do what the 10% do and just have a bit more caution. You don't need to rush into any trade. You just simply have to be smart about it. And again, if you want to lower your risk and go in, fine, that's cool. As long as you've seen the risk and you've calculated for that risk. If you've seen the risk and just like, yeah, whatever, you're just going to chuck money at it anyway, then it's your demise, but then it's your mistake to learn from. And by all means, it could just shoot through the roof. But then, if it comes up again, will it do that again? Or would you be better off taking a step back? And these are your experiences that you guys have to learn. I can tell you, but whether you do it or not is up to you. Because I could tell you I wouldn't take this trade, but you could hear that, then go out for your own, have this same opportunity, and be like, well, he didn't take it, but I'm going to try. And you get that experience for yourself. And whether it works or not, I'm not to know. However, let us play price on here. And let's see where it goes. So we miss out on the take profit. And it's past 5 anyway, but the take profit would have been hit for a 1 to 1.5. It's not bad going. Not bad going at all. But like I say, even if it was a winner, which it was, I would take a step back because I value my money too much, just to be flinging it on a target that's already been hit. Same applies for the other pairs. If your target has already been hit, calculate that. Understand that it is now a risk. It's a riskier position to put yourself in than if your target wasn't hit. Right? So just be smart about it because it's your money. So we're going to do one more. I believe we're going to try to stick it in the time frame. We're on 53 minutes at the moment. Well, 52, 53. Might be different for you because I might cut stuff out. Like I say, me spilling my coffee and stuff like that. So. Okay. So I played price on a bit too far here. However, we would have played it through anyway. So let us just do what we were going to do. So 5 minute, we didn't even get an entry anyway. As you can see, we broke above. We got our tap back in. We didn't get out engulfing above the zone. Price blew right through. And then it looks like we're coming down to the middle of the zone. Anyway, you might have noticed on that 30 minute that there was a previous US session high here. And that's quite clearly what we're rejecting off. We rejected off here, but then price came down, but then we're still trying to hold it for this one here. So you get the kind of gist of things. It wasn't the most successful of sessions in terms of win rate, but I think it was one of the most successful in terms of lessons learned and sort of trades not to get into, what to sort of manage, and if that take profit's already been hit and you're not in the trade yet, the risk dramatically increases for you to then get in that trade again and aim for the same take profit. So I think in terms of learning, I think this was one of the better ones. But in terms of winning trades, obviously it wasn't. But like I say, there's many opportunities that we've seen in the US30 video showing this strategy working. So I actually quite enjoyed making that one. I'm not going to enjoy watching it through. It's going to be a long process. It's going to be a long night tonight, boys. But yeah, thank you so much for watching. Hopefully it was informative. Any feedback you have, let me know. Good or bad, medium, on the fence, whatever you want. Let me know. But yeah, thank you so much.